And for more, we're joined by Chris Kempitsis. He's managing partner at Barnum Financial Group. Chris, thanks for joining us today. So this rare rally we're seeing across all four major U.S. stock indices as a bet that those rate cuts will keep powering corporate America. But how rational is this? I mean, with stocks already at all-time highs, is the Fed risking fueling an asset bubble?
Well, that's exactly right. We hit fresh new all-time highs today. And look, the reality is what goes up at some point may come down a little bit. Are we in a true asset bubble? I don't know that there's evidence that that is the case.
Right. So Jerome Powell yesterday, he said, the cut was a risk management one. How do you see it?
Well, I think this cut had multiple positives for Powell. Number one, it takes the heat off of him and the pressure to finally begin cutting rates. A quarter point is not going to reverse an economy that is ailing, but it's going to show that the Fed is looking to be accommodative. And where it goes from here remains to be seen, but clearly the message is, should the economy require it, the Fed is now ready, willing, and able, data dependent, to cut rates further.
Yeah. Now, Chris, bond yields, those reversed after the drop in jobless claims. How do you interpret this labor market's resilience amid a lower interest rate environment?
Yeah, it's impressive to see how the labor market and the U.S. consumer has withstood the tariffs, the interest rates, and the uncertainty of recent months. Ultimately, the labor market is slowly weakening, and that is why we saw interest rates go down this week and why the Fed is open to them going down further. So it is all eyes on labor market from here to the end of the year.
Yeah. Now, just going back to stock moves, I mean, a lot of the action was centered around, or rather has been centered around big tech, I mean, AI as well. And then some critics are saying that valuations are stretched. How concerned are you about the increasingly narrow market leadership, especially with only a handful of mega cap tech stocks driving the S&P 500's gains for one?
Yeah, it's a great question. It's going to come down to time horizon. If your time horizon on an investment is short, then you have to be concerned about where valuations here as we're hitting these fresh all-time highs and we're so highly concentrated. If your time horizon on an invested dollar is long, the themes of artificial intelligence and technological innovation are going to continue in the long term to produce impressive results as the world continues to evolve and change. So, we're recommending that investors keep some dry powder on the sidelines, especially if they may need access to that capital in the next 3 to 6 months. But if we're talking about a 5-10-year time horizon, it is hard to believe that technology is peaking. It's really got a lot of room to run over the long term.
Yeah, I just wanted to zoom in on one of the developments overnight. That is a $5 billion Nvidia investment in Intel, which really helped spark a massive one-day gain for Intel. To you, does this mark a turning point for such legacy semiconductor players, or do you think it's a one-off move, you think?
Well, if we think about Intel, what we want to think about is the fact now that they have the support of an incredibly powerful company that's leading the market in Nvidia, and they have now the support of an incredibly powerful government in the form of the United States. So there are a lot of people that are now highly invested in Intel's success. In fact, I believe we just saw the investment that the government made about a month ago in Intel go from about 9 to 13 in terms of the growth in 30 days or so's time. So absolutely, I think this speaks highly to the future of Intel and the attention that's going to be paid to it. In terms of Nvidia, I think it's less so a dramatic and powerful move. This is a juggernaut that just has tremendous amounts of investment, and Nvidia gets to pick its spots here.
Yeah, and you know what it means for Nvidia coming as it's facing troubles in China and continues to face quite a lot of uncertainty there, especially the U.S.-China trade deal still being hashed out. The reports, especially that Chinese tech firms are pulling back from Nvidia. And so, how should investors be thinking about geopolitical risk in this AI and chip space?
There's no question that Nvidia, in essence, is turning into a pawn in relations between the US and China and ultimately where those trade conversations go. That's going to be decided by other people, but Nvidia now becomes an important topic of conversation. Ultimately, regardless of the exact markets that Nvidia plays in, long term, if they continue to have an industry leading product, they will continue to have industry leading results. The demand for Nvidia is there regardless of the specific market.
All right, Chris, appreciate your time. Chris Kempitz is a managing partner, Barnum Financial Group.